don't miss this clear warning for silver price. Devastating report just released. Reports out today show stocks crashing, inflation flares, and in this video, I'm going to break down this release and show exactly how this changes the price of silver. We've been reaching for $30 for a silver price, really hoping to push up to $35 an ounce. Let's see what's going on. This is from Reuters. It says, Wall Street stocks fall as weak GDP growth spreads rate cut gloom. Now, one of the key factors to silver price is that feeling of uncertainty. And when people feel like the economy is fluctuating up and down, completely out of their control, they feel uncertain, and that impacts silver price. The other part that's impacting silver price, just with this headline, is that weak GDP growth. Now, we've been hoping that our economy is expanding. We're hoping that inflation is getting under control, and we are really looking to get some rate cuts. But if our GDP, our gross domestic product, if that growth is weak, then we're not going to get the answer that we want from the Fed coming up. Now, let's start. This article says, Wall Street stocks closed lower on Thursday as markets were stunned by data showing slower than expected U.S. economic growth and persistent inflation, coupled with a sell-off in large cap stocks triggered by disappointing results from Meta platforms. So we've got three there that are making people anxious about the economy. This article says, data on Thursday showed that the U.S. economy grew at its slowest pace in nearly 2 years. We don't want to hear that. Slowest pace in nearly 2 years in the first quarter, while inflation accelerated, dampening hopes that the Federal Reserve would begin cutting interest rates this year. As these weeks roll out and we close out April, everyone is hoping that the data that is reported, these releases coming out, will show that we have some support for a rate cut, because we're already hearing from the Fed that at best we'll see a cut in December. So this data that I'm presenting now is really not helping our case. And this is another article from Reuters that just came out. And this headline says, imports hold back U.S. economy in first quarter, inflation flares up. It says, the U.S. economy grew at its slowest pace in nearly 2 years first quarter amid surge in imports and small buildup of unsold goods at businesses, signs of solid demand that, together with an acceleration in inflation, reinforced expectations the Federal Reserve would not cut interest rates before September. I'm going to say that in English because that's a mouthful, right? Well, what this data is showing is that as we look at this first quarter that just closed, we're seeing a surge of products being imported, and we're seeing people buying more, right? We're seeing that there's signs of real demand, and with that demand, people are making more purchases, but our economy is not expanding the way we really hoped, and therefore inflation is really sticking. And that, in turn, tells us that interest rates most likely will at best come at September, most likely at the end of the year. Let's continue with this article. It says, the cooler than expected growth reported by the Commerce Department in its snapshot of first quarter gross domestic product on Thursday, which also reflected a downshift in government spending, which is what everyone is fighting for, a downshift in government spending, exaggerated the moderation in economic activity. Domestic demand, a better growth measure, I agree. Domestic demand is a better growth measure. It was strong as consumer spending moderated slightly while business investment picked up and the housing recovery gained steam. So we are seeing a bit of recovery in people purchasing homes, even with this mortgage rate at 7%. We're seeing some, as this author states, we're seeing it pick up steam, but it's not where we want it to be. This article says, trade and inventories are the most volatile GDP components. Trade and inventories. And they're often the subject to revision when the government updates its growth estimates. Fed officials are expected to leave rates unchanged, unchanged at the U.S. Central Bank's policy meeting next week. This article also says that GDP increased at 1%. This goes into the numbers, and it also says that the forecast would be a rise at 2.4%. So we're getting a big difference in numbers. I'm not going to go through each of these numbers and these economic forecasts, but what I do want to highlight in this article is that it says the U.S. economy, which has outperformed the economies of other advanced nations. Listen to that clearly. The U.S. economy, which has outperformed the economies of other advanced nations, is being supported by a resilient labor market. Now, we've seen this is not the first article being released that shows data supporting that we have a resilient labor market, and that's good news. We want to have real wages, but at the same time, that's a struggle that the Fed goes through, and it's not just us. It's every central bank is struggling with this. Having a strong labor market means that people have money to buy, right? Because their purchasing power increases. They're having money to buy. But at the same time, we need that inflation to be under control. And that's the balance that every central bank is going through. So as these numbers come out, and as we look to the Fed meeting at the end of this month, I believe it's next Monday or Tuesday, as we look toward this, the price of silver is directly impacted in two ways. The first is that these numbers show us that we are not going to have a rate cut for quite some time. And when that happens, people have two options. They either go into precious metals or they go into the safety of treasury notes. And along with that, they typically go into the tangible asset of the housing market. Now, the housing market is really out of the picture with a 7% mortgage rate. The amazing part that we are in this moment in history as silver stackers is that silver has been really fighting right alongside with the strength of the dollar and the strong yield in treasury notes. It's been incredible. The silver, we thought we were going to see the past few days, we thought we would see a big correction in silver as the dollar remains strong and as these yields on treasury notes remain strong. But silver is really, we're not seeing a large correction in silver. So this, again, I'm not a financial advisor. I'm just a silver stacker telling my opinion. And by the way, if you're enjoying this content, please hit subscribe and hit the like button. It really helps get this information out there. Now, it tells me that people are going to continue to, instead of put their money into the tangible asset of housing and real estate, they're going to continue to go into precious metals. And that is what's really keeping our strong spot price for gold and for silver, right? This silver we thought was going to be dropping down to $26, even back down to $25 these past few days, but it hasn't. It's been remaining. It's almost up at $28 again. So we're seeing another push for silver going up again. And as the Fed meeting comes out early next week, we're going to see another push for silver going up, because the chances are very high that we're going to be told, oh, actually, we were wrong. Rate cuts are not coming in June. They're probably not going to even come in September, and maybe in December. That's my prediction. And when that happens, that makes people go into the safe haven of precious metals, and we see a big bump in silver. Now, as silver goes up to that $30 range, I see $31, $32 coming before we even know it. When we're up in that range, it's just a short leap to get to $35, and that is the most exciting for me as a silver stacker. I've been in this for years and years, and to see silver get to the $35 range is going to be just a massive shift for all of us that have been stacking silver for a long stretch of time, because that really puts all of our holdings into a next level of wealth. It really, and I'm not, when I say wealth, I'm not talking about getting rich. I'm not saying that we're trying to get rich off stacking silver. I'm talking about just the amount of wealth that we have stored in this metal. When we started it from $15 to $25, those $10 increments are so exciting. And that's what I see coming, especially with this data just released today. That shows me that we are absolutely on the right track. And seeing silver hold steady, we were almost at $28 again, $20 an ounce today. So seeing it remain steady, I see next week, this is my prediction. Again, I'm just a silver stacker, telling my opinion, what I see from my history of doing this for so long. I absolutely see silver reaching up to $30 before we even know it. And I could see that as the floor of silver. Whereas we've had, when I say floor, that's like the lowest that silver will drop. Our floor has been for such a long stretch of time. It's been $22, $23 for 2 years, but not with what's going on in the economy today.